At Maverick Ag, our goal is to assist and educate primary producers on all forms of business risk management. My name is Evan Schout, and I'm a CPA and CABE certified insurance broker. I've made my career focused on all aspects of primary producer business, including accounting, finance, and farm income programs. Our primary goal when starting Maverick was to provide farms a place to go to discuss, analyze, and identify options surrounding the risks on each of their own individual operations. We have created the Risk Management series of videos to provide farms an introduction into risk management. 6 short presentations that focus on the programs and internal processes that farms can take to reduce the stress that comes with farming. We hope you enjoy the content, and if you have any further questions, please feel free to reach out to us. Thanks for watching. Episode 3 of the Risk Management series. The truth behind AgriStability. Truth number 1. AgriStability coverage is managed by the producer. The strength of your AgriStability margin and the coverage is dictated by the management of each farm. AgriStability is based on historical operations of allowable expenditures and revenues in order to create your Olympic margin. Therefore, it is solely based on your historical strengths of financial information. AgriStability is a margin product that covers revenue and expenditures, making coverage known before the growing season. Between private insurance and AgriStability, there are 2 areas where you can actually calculate your worst case scenario prior to the growing season. AgriStability provides us the opportunity to know when payments will begin and at what level of loss your farm will incur. The Olympic average allows for a farm to have multiple years of loss while maintaining coverage levels. The way AgriStability works is it is based on an Olympic average where the highest year and the lowest year are thrown out. Why this is important is that having one negative margin year does not necessarily reduce your reference margin, therefore providing you strong coverage moving into the second year. Lastly, coverage can be stacked with private insurance. Private insurance also increases the reference margin strength. What we mean here is that if you claim with private insurance, it does not count against your own AgriStability claim. It is not included as part of your production margin for that year. However, the private insurance is added back when calculating your historical reference margin, which makes your AgriStability margin stronger. Truth number 2, AgriStability can cover cost of production. The easiest way to identify this to producers was to provide an example. So, quick assumption, a $375 cost of production average, which is more than average for the majority of our producers. This identifies a $450 gross revenue average, matches the benchmark that most accounting firms utilize of a 15 to 20% profit margin. Then we have $25 of other allowable variable costs outside of crop inputs, which include fuel, wages, electricity, and freight, which are all allowable under AgriStability. And we're making the assumption that there's no other government insurance, aka provincial crop insurance, which then would have an effect on the AgriStability production margin. So based on the graph on the side, the conclusion comes that AgriStability starts paying at the same level as your actual cost of production in this scenario. You have allowable expenses, which are crop inputs plus the $25 of other variable costs, which are covered at the 100% level. Then you've got a reference margin, and based on a $450 gross revenue over that time period, at 70%, covers $200 per acre, which as a total covers $375 per acre, which is consistent with your cost of production. Now, keep in mind, the farmer pays a 30% deductible on this program, so you have around $260 per acre of total liability coverage on a $375 per acre total cost of production. In this scenario, AgriStability in many instances will actually be the first program to trigger, whether you utilize private or crop insurance. Truth number 3, AgriStability covers more perils than any other program. So under allowable revenues for AgriStability, they're margin based on yield perils, drought, frost, hail, flood, commodity market perils such as tariffs, economics, speculation, hedging, contract buyouts, and private insurance not included in the claim calculation, but is included in the reference margin. Secondly, allowable expenses for AgriStability include more than any other program. What I mean by this is they include crop inputs, including seed, fertilizer, and chemical, less any eligible rebates, but they also include other costs such as fuel, arm's length wages, electricity, heating fuel, freight, elevation and storage, and other livestock allowable expenditures. Based on today's activities, fuel costs rising, us paying more in minimum wage for arm's length wages, electricity and carbon tax, all of these increase in expenditures are covered through the AgriStability program. Truth number 4, AgriStability can be a timely insurance product. AgriStability is calculated utilizing your accrual financial information as well as your cash tax filings. You can file interim applications, which based on the 2021 drought year have been increased to 75% of your estimated claim payment. Your final application can be filed anytime after year end, up to September 30th without penalty. What this identifies is if you can have your bookkeeping and your financial statements done, you can file your AgriStability claim at that point. Truth number 5, AgriStability is not complicated. AgriStability requires the following information for filing. Financial statements, which is accrual financial statements, are required to complete the application. Now, if you do not have accrual financial statements, you can still complete the application utilizing cash and accrual to cash forms that are provided by AgriStability. Your tax return. You require your cash tax filings are required for both AgriStability and AgriInvest. And the hardest part for most producers is that inventory flows are required. What this identifies is you need to be able to provide your opening quantities of inventory, your production, which if you're in crop insurance should agree to your production declaration, any purchases, sales, or seed quantities utilized, which will agree to your financial statements. And those 3 items, when calculated, will provide you with your ending inventory. Lastly, some few other interesting facts regarding AgriStability. AgriStability across multiple operations working together may or may not be combined. What is meant by this is if you operate in a partnership or a joint venture, but your financial accounts, your legal entities, and operationally you do not farm as one farm, they will not be combined for AgriStability purposes. Secondly, AgriStability has a maximum cap of $3 million per operation. This is why point 1 is important, because if you are uncombined from another operation, you will receive the full $3 million maximum limit. Third, AgriStability is a whole farm, which lowers its ability to protect diversified operations. If you run a cattle or a poultry operation in combination with your grain farm, you must closely analyze whether AgriStability is an appropriate program for yourself. Fourth, price indexes are used for calculations based on geographical and area average prices per province. What this identifies is that they use an index pricing when they do not have subsequent sales from your actual operation. And lastly, provincial crop insurance reduces an AgriStability claim. You cannot collect from multiple government-funded programs at the same time. However, private insurance does not reduce a claim, making it an appropriate risk management planning opportunity. My last slide has the AgriStability statistical summary. As one of the biggest negatives I've heard regarding the program is that it does not pay. What most producers fight with is that provincial crop insurance reduces your claim, hence why you may or may not have ever got a payment through the AgriStability program. However, based on this slide, which I apologize for the out of date, significant amount of payments has been given to Western Canadian producers. Thank you.